As the calendar turns to September, investors have to wonder if the September effect will be in place. Are there stocks to keep an eye on even when others are underperforming? Sure enough, there are. We're going to be looking at 3 growth stocks that offer a buying opportunity in September. We're going to discuss American Express, Amgen, and Apple. Let's dive in. Welcome back, guys. Somehow we're already into the month of September, which of course has investors wondering if they're going to be dealing with the September effect. So as we know, and for those that don't, that speaks to the historical trend of stocks underperforming in September. Chris, in your article for MarketBeat, you had mentioned how investors approach September. It may depend on whether they're an optimist or a pessimist. You know, guys, I don't know about you, but I am always looking to make some money. And the holidays are right around the corner. So I am going to go on the side of optimism for now. Chris, surely you have good news for me here.
Well, I think I do. As I usually do, I wrote that article with long-term investors in mind. If you look at the stock market and you look at what's going to happen in the next month, 3 months, 6 months, there's a lot of reasons to stay on the sidelines. This market is full of contradictions right now. And there's a lot of, if you have a bullish perspective, there's reasons to support that. If there's a bearish perspective, there's reasons to support that. But if you widen out your lens a little bit, and really not even that much, but if you widen out your lens a little bit, you can see that over time, there are companies that they just continue to beat the market year after year, year after year, you know, and that's sort of the reason that those were the companies that I was focusing on in my article. And those are companies that, again, if you're a savvy shopper, you're looking at those companies, and when you see the stock price pull back a little bit, that's an opportunity to buy.
Thomas, I feel like it's been a minute since we've talked about growth stocks here on this channel, and I've listened to you enough to know that you might not be so optimistic. I heard you talking about a market top and then a correction. Am I right here?
Yeah, I think that we're heading for a correction. As far as being pessimistic or optimistic, I am pessimistic on the near term. I think that the market is set up for a big fall. There's not a lot of reasons to think that the average investor is going to flood back to the market with their money. But I view these pullbacks as buying opportunities. I sit around waiting for these things. I love a good 10-20% correction in the stock market because that's when it's a good time to buy stocks. So long term, I'm definitely optimistic. I'm looking for some buying opportunities to develop over the next month or so.
All right. So all of that being said, Chris, you have 3 growth stocks for us today that offer investors a buying opportunity for September. I'm looking at them right now, and I'm going to call them the AAA today because we have American Express, Amgen, and Apple. Obviously, I'm going to ask why these stocks? What makes them stand out among others?
Well, I didn't actually plan on doing 3 stocks that start with A, but yes, they are AAA, and I would say they all get an A rating for me. I will move through these as quickly as I can. So in terms of American Express, we all have heard the data that says consumers are putting a lot on their credit cards to manage through this inflation. That means that, especially for the lower middle income consumer, you're seeing a lot more delinquencies. That means late fees for the credit card companies. And of course, government in its way is helping things by regulating things. And that means they're going to they are making an effort to regulate how much, or in this case, how little credit card companies can charge as far as late fees go. The change is going to be probably about, they're trying to look for like $8 as a maximum, as opposed to maybe the $31 or $40 that credit card companies can do now. And of course, that's to the detriment of many credit card companies because they rely on those fees as part of their revenue. However, American Express is a little bit of a different story. They don't rely as heavily on those fees. Yes, American Express does have products today that allow individuals to carry balances. That wasn't the case back in the day, but they are still not as reliant on those fees because their target market is a more the premium customer. Moving on to Amgen, they had a good earnings report about a month ago. What was holding the stock back was there was concern that the FTC was going to block their acquisition of Horizon Therapeutics. The FTC has since given them the go-ahead, and as sometimes happens in these cases, investors are selling on the news. I think this gives investors a good pullback. I think the stock's down about 5% since the news broke. This is a good opportunity to get in on a really quality stock in the healthcare area. And then we go to Apple. Oh boy. So I'm ready because I know that we're doing this video today and Apple is down big. There's some bad news about Apple. This is a stock a lot of investors love to short. And you know, Lacey, when I talk about optimism and pessimism, Apple is a great stock to keep in mind, because if you're bullish about Apple, there are reasons to be bullish. If you're bearish about Apple, you can find reasons to be bearish. There's concerns about their iPhone sales, particularly in China. There's concerns that they're not going to blow people away when they have their launch event next week. All of those are valid points. That's not how I look at Apple. I look at Apple as being a company that's moving beyond the iPhone. They are taking steps to move their supply chain, and they're actually moving it rather aggressively in other areas. The stock, and actually, to be honest, I'm not quite sure that the pullback you're seeing over the last 24 hours is totally due to this news that China might be cutting back on allowing people to use their iPhones at work or whatever. I think you're seeing Apple's down about 10% from their top, and their top was about 2 weeks ago. And this could be just a natural pulling back with people taking some profits and, you know, waiting for the next leg up. It's a good time to nibble at this stock. It's not necessarily time to go all in, but when you see a 10% pullback on a quality stock like Apple, that's a buying signal to me.
Thomas, I can tell you're over there on the edge of your seat, patiently, not so patiently waiting to jump in here. So what troubles you about this list?
Well, Lacey, nothing really. I think this is a good portfolio for long-term investors. It's nice and diversified. You got all blue chip names. You got some dividends in there. I would definitely call this a sleep well at night portfolio. And that's not surprising, because I think that we can say that Chris is a sleep well at night investor. I mean, I wouldn't call any of these growth stocks, but they're all growing. Their businesses are well above the pre-pandemic levels, and they're still growing now. There's a little bit of normalization compared to the pandemic peaks, but solid revenue, solid earnings. I would definitely buy these stocks on dips.
Okay, well, we all want to sleep at night, right, Thomas? So, all right, well, whether you lean towards optimism or pessimism, the key takeaway here is that September can offer opportunities for those that are willing to seize them. So make sure you subscribe to our channel. Check out the other MarketBeat resources that I have linked for you down below so you can stay informed and prepared to make market moves. You know, also, I do have a free report linked for you down below. It's 7 energy stocks to buy and hold forever. Lots of people can find that one useful, so be sure to grab that. Anyway, thanks for joining me, guys, and we'll talk soon.